While I've been very interested in SOFR and other interest rate derivatives for a long period of time, I really haven't until recently understood how important the whole derivatives market is to the potential financial crash in the U.S. financial system. And the reason I now have more of that knowledge is because of Phil Lowe, who's an economist who has talked about the key importance of the whole derivative market, which he says could be worth as much as $1 quadrillion. And as he explains it, to keep the whole shooting match going, including the stock market going up and credit going up, it requires that the money supply continue to be growing at a fast rate. And by money supply, I mean bank credit, increasing loans, and so on and so forth. And then he also mentioned a couple other people that are very knowledgeable about the whole derivatives issue and how important that could be to the next potential financial crisis. And that is Ravi Farber, who for the first time in some of his reports has given me updates on what's going on with the size of the SOFR market, which has a daily trading volume of more than $2 trillion of trading in one day last week. And you put this together, and I think, and we'll be seeing more about them in the newsletters. For example, one thing that Ravi Farber also mentioned was there's a date of September 15th in which the amount of borrowing, I believe, by the Treasury is going through the roof. I think his number is that the Treasury has to raise at least $500 billion in a short period of time. And also, the fourth quarter, the amount of Treasury bonds they have to sell is also has gone up dramatically. And all of our comments, let's say the three of us, Ravi and Phil and yours truly, Bob, are saying, who's going to buy it? And the question, again, which is going to be an important theme, is if you look at who has been buying treasuries, it's no longer foreigners. They tend to be sellers of treasuries, whether it's Chinese or whether it's other important buyers or whether it's the Japanese also selling. They got to raise it from domestic sources. And domestic sources, this is back in the Paul Volcker and or a little later Bill Clinton years. This gives enormous power to what Bill Clinton famously called the bond market vigilantes. Those who are saying, yeah, we may, Treasury, buy some of the bonds you are desperate to sell, but we want dramatically higher interest rates. Could this happen again and be the cause of a major bear market in both the bond market and the stock market later this year? Stay tuned.